I'm Saurabh and today I will be teaching you chapter 11 Indian Economy Ramesh Singh. The chapter name is Indian Financial Market. Fine. So, if I will talk about Indian financial market. So, market of an economy, what is market? It is a transaction between fund surplus and fund scarce. So, in a financial market means in overall the domain of our governance, in that there is transaction, there is people and government, and among people there are business entities like industries, banks, borrowers, lenders. So a market is transaction between fund surplus and fund scarce. Some people, they may have fund surplus, they may give, they may borrow, they may lend to fund scarce people, and in that ecosystem, that is in that simple ecosystem and become so advanced that we call it financial Indian financial market. Okay, and what will be the basis of that transaction? A fund surplus people, some fund surplus people in the ORN giving money to fund scarce people of Mukherjee Nagar. So basis, what will be basis is that they will, fund surplus will give money to fund scarce on the basis of some interest, or they may promise some dividend every year. Fine, this market have organized. So when it becomes organized, we call it what we call it Indian financial market. Or so now we will come to the main part, the theme. So about financial market, it is in every economy is the transaction between people. Okay, so in every economy, on economy we are talking on large scale or country scale. So in economy, financial market have two separate segments. One, they may the fund surplus people will may lend you at higher interest for long term, for 10 years say. So on the basis of interest, and when time is included, so on the basis of that time it is divided into short term funds and long term funds. So short term funds financial market is known as money market. Money means it is easily transactionable, easily you can give someone. So if you are going to give some fund to some people, you will give in cash, but for long term you may give something like gold or any other thing. So short term financial market is called money market, and long term financial market is capital market. And money market fulfills the requirement of funds. So in money market, what is the time period? It is 364 days for short term, and more than 364 days, that is capital market. So capital market means you are investing in some physical assets like land, gold, cash, cash not, but shares. So so first we will talk about Indian money market. Money market is nothing but short term financial market of an economy. I told you, I try to tell you financial, what does financial market imply, what does it mean. Then I related you to the economy. Then money market is the short term financial market of economy. In this market, money is traded between individuals or groups. So from fund surplus to fund scarce, money is traded between fund surplus, financial institution, banks, government, companies, to fund scarce, individuals or groups. Trading is done at a rate. So what was the basic factor? That was the rate at which fund surplus give to fund scarce. It is rate. The basis of transaction is interest or dividend. So trading is done by a rate, a discount rate which is given by market and guided by availability of demand of cash rate. The repo rate of the time announced by RBI. Now who will come in between? Money market, fund surplus give money to fund scarce at some interest rate, but they may exploit each other. And normal in governance affair, we see for this there is judiciary or police system is there, but they will not come in financial market because it is not their expertise. So who controls this? RBI. RBI, the central government, is there for controlling it. Repo rate they decide, announced by RBI. RBI decides a repo rate, and that is guiding rate for current discount rate. That is the guiding rate for all the banks who will give other person fund surplus person. Example, bank give to money to fund scars. So this will be a short-term market. Borrowing in this market may or may not be supported by collaterals. If the money market, financial assets which have quick conversion quality into money carry minimal transaction cost. Finally, at last, my repeated words come. Money market may be defined as market where short-term lending and borrowing take place between cash surplus and cash scars, fund surplus and fund scars. Banks, government, RBI, companies to cash scars, individual group, new startups. Market operates in both organized and unorganized sector. As I told you, there is organized sector, there is unorganized sector. From person to person, what I am fund surplus people, you are fund scars, I will give you money. That is person to person. We're converting into telephonic transaction. Now, for example, you are paying by UPI, it has no online, fine. So the transaction, and sometimes what, so you do transaction person to person basis, but you do transaction through someone intermediate. So if you are sending money via online, via UPI, someone is the broker there. The internet framework system, internet framework, that is infrastructure, internet infrastructure that is used, Paytm or Phone Pay or Bharat Pay, someone is the broker there. So between the two trading site. So we need money market. Why we need money market? Income generation is the most essential requirement of economic system. In modern industrial economies, creation of productive assets is not an easy task. It requires investable capital, long-term nature. Long-term capital can be raised through bank loans, corporate bonds, debentures. But once,